4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. They're both free downloads. Let's get started. G'day, trader Stacey Burke from Stacey Burke Trading. Today we're going to review a couple of fantastic opportunities that have presented this week in FOMC 2-part release Wednesday week. But going back and just understanding two things. Number one, what setup are you hunting? And then allowing markets to set up and offer us playbook trading setups. Best playbook trading setups. Now the higher time frame is where everything comes from, the signal days. We're looking at gold on a daily chart. We talk about the 3 things that markets do. Now here's the thing. Traders are asking for reviews of charts to go over what different charts are doing, and I'll repeat the same thing. What setup are you hunting? The instrument is irrelevant, but obviously we have high probability instruments that continue to rinse and repeat playbook trading setups. We've talked about criteria that rinses and repeats on any market. Markets that close in breakout, markets that break out on the day, and markets that give us signal days. We've talked about the ACB templates, opportunities that are exceptional risk reward for traders, and they repeat on any instrument. We've talked about signal days in the playbook, and we repeat this in every video because these are powerful signals from the higher time frame that can alert us to instruments that are setting up. And then the next question is does the setup present in our session? Some of the trades are going to move in Asia. Some are going to move in London. Some are going to be set up for the New York session. We have breakout traders in the markets. We have markets that will pump up into a previous monthly range and give first red day signals, or break out and fail and give first red day signals. And the same applies for first green day signals. And then allowing those templates to evolve week 1, week 2, week 3, week 4. And being patient and sitting on our hands and not trying to trade every little zig and zag in the market and hope that we catch a move. We're talking about rinse and repeat setups. Now, if we just zoom in on gold for a moment here, we're looking at the daily chart, and this hopefully will put things into perspective for traders. We have a market that's broken out in April, continued higher through the high of month level after pushing higher beginning of the month. And you'll notice again the 3 lower closes, 1, 2, 3. 1, 2, 3, dumping down into the previous monthly range before giving us an inside day. 1, 2, 3 down after pushing higher highs, 3 lower closes, an inside day, and an explosive continuation in a strong bullish market. Coming to the closing week of the month, we go into consolidation. We have a first red day signal. Now, we've reviewed this in previous videos, but I want to emphasize you're going to get these signals. Remember the monthly cycle: open, low, high, and close, forming a bar chart. So if we review that again, just the understanding that by the time the month closes, we're going to have a bar chart of some sort. Open high, first red day, a low and a close, an open low, first green day high, and a close. But a first red day signal can close out the month. Now this is the thing. You may get these signals. It doesn't mean you're always going to have a setup, but they're signals. So traders will often say, well, it was a first red day, but it didn't happen. It didn't work out. But was there actually a setup? So setups, rinse and repeat. We're going to look at a specific example of that. And the simple understanding, though, is understanding that if you're in a template for the month, continuing that thesis throughout the month, if indeed a setup presents. Now, sometimes we'll look at an example today on the DAX of how markets will drag traders. Now, traders are trying to catch moves and get into movement, but that is not the setup. And so when I repeat and print the same charts over and over again, sit on your hands and wait, and don't engage in impulsive, irrational, random, degenerate gambling type of trading behavior. Be willing to hunt out the setup on any instrument, even if your basket is 5 or 6 instruments. If you're trading one instrument, you are not going to get the 5-star opportunity every single week. You will have trades, but we're talking about scalable opportunities that can significantly compound your trading account. Now, what traders do in between actual playbook or ACB masterclass setups is up to them. When they get behind closed doors, they do all kinds of things and then rationalize it to themselves that it didn't work, or this didn't work out, that setup didn't happen, it doesn't work all the time, but you're actually just taking trades. When the setup presents, it's a 90-10. And if we come back to this week, we have Friday's closing range of the week forming an inside bar. Now recognize the larger consolidation. And this is where traders are missing the bigger picture, is that they're trading all the movement inside because it has volatility. I caught that move. I got 100 on gold. I got 50 on gold. I got 400 pips on gold. And they're definitely session setups. But we're talking about markets from the higher time frame when they set up for larger scalable opportunities. We had a first red day signal, a market that gapped down, one leg down, pump up, inside day, 2 legs down, pump up, inside day, and then 1, 2, 3 lower closes, the same setup that we just saw at the beginning of April. Now, the phrase, you're either inside or you're outside, is that if you're trading on the inside, well, obviously they're potentially nail and bail opportunities because we're going to have movement in every session, whereas when we get on the outside, we now are looking at opportunities that can explode for larger scalable opportunities. Now, you'll recognize that we've dumped down inside of previous higher time frame buying in a strong market. We were given a signal day on the closing range of the week. A non-farm payrolls Friday, beginning of a new month and a new timing cycle. So it's important just to emphasize that the same behaviors repeat over and over again, and that the higher time frame can alert us to when a market is about to potentially go on an explosive move on the higher time frame. And you'll recognize, even if we just look to our left, again, the same behavior. 3 lower closes and an inside day. Now, this market has been in a strong bullish trend, but the same behaviors rinse and repeat on any market. 3 lower closes in April, the inside day, and in this particular case, Asia got the trade. We reviewed this in a previous video. We have a market that has coiled sideways, our dump down, our coil, we have our signal day, our coil sideways, then we have our engulfment in the Asian window, our timing window, timings, levels, and behavior of price for a large explosive continuation in the long direction after dumping down and giving traders the opportunity to re-enter a strong bullish market. 3 lower closes and an inside day, signal day from the higher time frame. Simple model again, dump, coil, and pump, trap and shift, as my friend Steven says. So we have an instrument that's come up on our watch list. It's given us a signal day. The trade setup presents in the Asian window. Similarly, at the beginning of this week on Monday, Friday was an inside day after 3 lower closes. And again, the Asian session had the opportunity to position themselves after a dump close, higher highs, and a V-bottom entry opportunity in Asia, triggering the high of day level before pulling back and coiling for the explosive continuation trade in the Europe window. 3 lower closes and the inside day. Which brings us to Tuesday, day 2, a market that coiled sideways into the close after breaking out, closing and breakout. But when we go back to our previous daily chart, remember we had a market that closed and breakout. There are 3 things that markets do. They break out, they pull back and continue, or they break out, they fail and reverse. We already have a market that's reversed back inside, and now we're targeting potentially the other side of the range. Low-hanging fruit on the higher time frame. Page 96 in the playbook. Trend continuation trade on a higher time frame. Everything's fractal. So we had a consolidation. The market's broken out. Now we're targeting the other side of the range. Now, The key thing is, how does price set up and behave? We have a signal again, a market that's closed in breakout. It's day one on the front side of the week. Tuesday's day two. Now, one of my favorite day two templates is, of course, the Dow Jones from May 9th, 2024. Market that closed in breakout, coiled sideways, and gave us a beautiful parabolic ACB trade setup opportunity on the back side of the week. Now, Thursday's day two, and I've repeated this, I'm looking for day two opportunities on a day two. Now, whether we're front side or back side, if I get the same template, different instrument, this is a U.S. market, I'm looking for this setup in the U.S. session. I don't trade New York indexes in any other session. But when I'm trading gold, which can trade fantastic in the Asian window, I will look for opportunities that rinse and repeat. Same type of template, same type of setup offered in the Asian window. Day two, front side after closing in breakout, aligning us with a higher time frame signal day. 3 lower closes, a signal day after a market breaks out, closing in breakout. And understanding that if most breakouts fail, what setup are you hunting? Now, this is a fantastic opportunity that gave traders a scalable 5-star parabolic move in the Asian window, targeting higher time frame levels from the breakout of the daily chart consolidation. A day two parabolic range expansion trade on gold in the Asian window. Reminder to traders, page 25 in the playbook, false breaks can be the beginning of large moves. As my friend Steven says, trap and shift. When markets break out, they will do one of two things. They will fail and reverse, or they will continue in line with the breakout. If a market is in breakout, don't chase the breakout. Let it consolidate and give you a signal for either a continuation trade or, as we've talked about with first red day, first green day, signal days that will align with that higher time frame template for the easy money trades. Not trying to catch moves and read markets every day. Which instrument is setting up for a parabolic trade setup opportunity? Which brings us to the DAX. If we take a look at our DAX daily chart, the market closed in breakout on Monday, front side of the week. We have a market that has traded back to the last first red day collapse at the end of March. So the market's closed in breakout. It's come up on our watch list for traders that trade the DAX, most likely in the London session. But we've closed in breakout on our daily chart, beginning of a new month. You will also notice that we closed the month and broke out on the first day of the month. The closing day of the month gave us a pin hammer, taking out the previous low, the closing range of the month. New month opens in breakout, and you'll notice 1, 2, 3 higher closes. 3 higher closes starting from our pin hammer on the closing day of the month, trading back up into where our first red day collapse occurred at the end of March, the closing week of the month. Now we've got a signal, but more importantly now, it's not about that. How does price set up and behave on the day into our session? So when we go down to our 15-minute time frame, we can see that Thursday was where our pin hammer occurred on the last trading day of the month, closing in breakout and continuing to trade higher on our non-farm payrolls Friday. Now here's the thing. Take a look at these charts each day. Differentiate these charts, dragging traders and getting them to, I caught the move in the DAX, but what setup is it? We can be in a market that's continuing to grind and trade in one direction, but comparing that to the instrument and the setup on the day that's scalable. So if you're getting in somewhere over here in the US window or in London, you're in a market that's potentially going to go in either direction. But when we have our setup present, the setup where we're looking for either a trend trade or a reversal opportunity, we already know our higher time frame level from the previous chart, daily chart from the previous month, has given us a first red day level to trade back off of if the setup presents. Pump, coil, and dump, or dump, coil, and pump. Peak formation low, closing in breakout, continuing the closing range of the week, closing and breakout on day one in a new month. Monday, a day one runner. Again, you've heard me say, do not counter trend a day one runner. Why is that? Because it's going to continue to potentially grind in the same direction. We're looking for setups, and this is a beautiful example of building order flow potentially for a parabolic explosive move. Day two on the front side of a new week. So we didn't see that present on Thursday. On the backside at the end of the month, we have a market that's dumped down and continued to trade higher on the last day of the month, a pin hammer, pumping up, closing and breakout day two, front side of the new week, and we have a reversal trade setup opportunity for traders in the Europe-London window. A beautiful, well-executed trade setup for traders today. Tuesday gives the pin hammer right at the open of our Europe window. Remember, keep things simple. Not rocket science, not sciencey or anything else. Close and breakout, consolidation, the pump and pin hammer into our high of week level and our previous monthly highs and our previous first red day high from March for the short trade reversal opportunity. Keeping things simple. Entry, stop loss, and a take profit level. Not making it complicated, not convoluting it with all kinds of other mishmash. It's a simple trade entry, stop loss, and a take profit level based off of a setup. Higher time frame signals and levels, the timings, the behavior of price, and the execution by the trader. Pump, coil, and dump, or as my friend Steven says, trap and shift. Which is why I talk about building your muscle memory, going over the same setups, finding the same setups over and over and over again where it's easy to make money. Trading in a market that's grinding back and forth is hard to put size into, maybe hard to manage, maybe hard to hold on to. Trades that are setups that rinse and repeat are going to go quickly and explode, and locking in the money and then walking away. Not doing anything else that can damage the good results that you get. Rinse and repeat. One kick 10,000 times. Not 10,000 kicks hoping to catch moves. One setup repeating over and over and over again, whether you're going in the long direction or the short direction. Keeping things simple. Rinse and repeat, scale it up in size. Have a great day, traders, and may the markets go with you.